It's my pleasure to be here. My name's Richard Robbins, and I'm with Rent Moolah Payment Solutions. And this afternoon's topic is technology and the future of rent payments. So a little bit about myself. I'm born and raised in Montreal, so about 5 hours down the 401 eastbound. Did my education in Montreal at McGill, and then came to Toronto to pursue my MBA. When one doesn't know what they want to do when they graduate from business school, guess what? They go work at a bank. So I went to work at TD Bank and had the opportunity to rotate in the bank within different departments. And I found that the most innovative department, the one with the most technology, was the payments department. So I worked with the team that managed their Visa card portfolio, and then subsequently moved on to Citibank, where I managed the MasterCard portfolio. Van City, which is what brought me out to Vancouver. I was back in the world of Visa once again. People's Trust is actually the largest prepaid issuer in Canada of prepaid cards. So had an opportunity to work there. And now currently in my role at Rent Moolah, I look after everything other than, I guess, finance and technology. And our company processes residential and commercial rent payments online. So a little bit about our agenda today, just really briefly. We're going to cover payment trends in Canada. From there, we'll speak specifically on rent payments. And I have visibility to rent payments across North America, as our company processes residential and commercial rent payments for property managers across North America. We'll talk a little bit about how technology influences rent payments, and then we'll open it up for questions and answers. Does that sound good? Okay. History of payments. So in 1867, the Canadian dollar was established, but before the fiat currencies were introduced, people would trade, whether it was furs or spices or anything for that matter. There was a lot of trade that went on. We'll fast forward to 1968. For those of you who were around, that was when the first credit card or payment card was introduced. It was done so through the brand name of Chargex, which eventually evolved to Visa. In 1984, the Canadian big banks got together and they put forth to market a really innovative payment product, and that's called Interact. And Interact today remains a very popular method of payment in Canada. Unfortunately, Interact is unique to Canada. Interact payments outside of Canada actually don't work. I will talk a little bit more about that later, but nonetheless, when we opened up our checking accounts with any of the banks or credit unions, we would all get a bank card, and that bank card had an Interact logo on it, and through that, you were able to make purchases at the point of sale device. Beginning in 2003 and moving into 2004, many of you will remember that you all got new cards in the mail from your bank, and that was the introduction to chip and PIN. So now, instead of signing for a transaction that was a Visa or a MasterCard transaction, you would now put in a personal identification number, and that would be your method of confirming that it was indeed your card, and you were able to make that purchase. 2007, we saw the first contactless payment introduced. So this is when you're just taking your card and tapping on the point of sale device. And typically those transactions are below $50. Typically, depending on your specific risk profile and the type of merchant you're at, they may actually ask you to insert your card and put in your PIN. But for the most part, purchases under $50, you can just tap your card on the point of sale device and you're on your merry way. 2009 was the introduction of Bitcoin, and cryptocurrencies seem to have taken a little bit of a peak a couple of years ago. We don't read too much about cryptocurrencies as much anymore, but nonetheless, it's something to be aware of from a payments perspective. And 2014, we start seeing new entrants into the payments ecosystem, including Apple Pay, Google Pay, Samsung Pay, Alipay, WeChat Pay. So there's lots of other methods of payment that are challenging the typical payment issuers. So let's take a look at how people paid 10 years ago. 47% of people paid by cash, debit and credit card, about 18 and 13% respectively. Prepaid cards weren't even 1%. So if you think back 10 years ago, how you made purchases, for the most part, when I look back at the data, individuals had 3 different thresholds. So typically up to $25 people would pay cash. Between $25 and about $50 or $60 people would use their debit cards. And for purchases about $60 to $75 and over, people would use their credit card. So when we looked at the transaction data, it was really clear cut. We'll fast forward to today, and we'll take a look at how people are paying. So compared to 10 years ago, there's been a decrease of almost 38% in cash payments. Let's take a look at prepaid cards. They're up almost 130%. Credit cards are up over 70%. And you can just take a moment and think about you as a consumer, how you go about your daily life and how you make payments. And I'm sure this is reflective to an extent of how you pay as a consumer. You're probably carrying a lot less cash. You're probably using your credit card a lot more and your debit card as well. I mean, many years ago, if we would have forgotten our wallet or our purse at home, we would have turned around and gone home to get it. Today, it's okay if you leave your purse or wallet at home, but don't want to forget your mobile device, right? And so if you forget your phone, you're going back home to pick that up. So we'll talk a little bit more about each of the payment methods and do a little bit of a deeper dive. So cash usage has dropped significantly, and we still see cash used for lower ticket volumes. So, you're buying a cup of coffee or you're buying some food at a quick service restaurant. You may end up using cash. The nice thing about cash, though, is it does provide complete anonymity. So, for example, yesterday, a friend and I went to the LCBO, and I used my credit card, and I collect air miles because I participate in lots of loyalty programs, and I scan my loyalty card. So based on having done that, I mean, Visa knows that I made a transaction. They know how much. Air Miles knows probably exactly what I purchased. There's a lot of data that goes along with a transaction. My friend, on the other hand, he paid cash, and he looked at me and said, you know what, nobody will ever know that I was at the LCBO today. So people, there's a segment of the population that they just, for whatever reasons, they don't want anybody to know as much about them as people do find out when you make a transaction. So cash provides lots of anonymity, and hence the reason why all of the bad guys will still carry around hockey bags worth of cash, because it's not traceable. We're seeing a little bit of crime now happening with the cryptocurrencies, but cash is still king when it comes to those types of acts. Checks, we still see checks in rent. And we speak to tenants every single day in our business, and tenants say, I just spent $85 with my bank to order 50 checks, and the only time I'm going to write checks is to pay my rent once a month. So I've got 38 checks now sitting in my night table that I'm not going to use. Like, why are we still using checks? But nonetheless, for some reason, property management is still a space where we see heavy usage of checks. Electronic funds transfers, this is primarily used for business to business. We also use the electronic funds transfer system as individuals when we make a bill payment. So about 90% of us will log into our online banking system at least once per month and make some type of bill payment. That might be your utility bill, it might be your cell phone bill, it might be your credit card bill. So when we think about electronic payments, there's actually 3 types of electronic payments, each of which fall into a different product category. So the first one is buy now and pay later. So when we think of our credit card, we're buying something, but we're not paying for it for, in most cases, at least 21 grace days. That's the standard number of grace days that you're afforded. with a credit card product. So you're buying the item, but you're not paying for it. So the bank is actually floating the money on your behalf until you get that credit card statement in the mail. The next form of electronic payment falls into the description of buy now, pay now. Debit, exactly. So debit product, interact is sort of the term that we refer to it in Canada. Outside of Canada, it's a debit transaction. But debit is buy now, pay now, because as soon as you make that transaction, the funds are immediately removed from your checking account. Third category, pay now, buy later. And I'll talk a little bit more about gift cards, but there's two types. Open loop gift card, which would be a Visa or MasterCard product, and closed loop gift card, which would be your Starbucks and Tim Hortons type of gift cards. As far as these three product types are concerned, the one that we're seeing the most growth is actually in the category 3, pay now, buy later. And I'll talk a little bit more about that. So credit cards have increased in popularity. Almost 85% since 2008. They're absolutely the number one payment method used in a point of sale environment. So again, just think about your own personal behavior. For the most part, you're probably using your credit card. Why? Well, it's accepted everywhere. They're super convenient. When I was managing credit card portfolios many years ago, people would determine which credit card they would apply for based on the annual interest rate. And the marketing teams and the loyalty programs have done a great job to shift that thinking. Now, the number one reason why somebody applies for the credit card, it's based on the loyalty program associated with that card or cash back. So a lot of people still have a strong affinity towards cash, so they're looking for a cash back card. A lot of Canadians are looking for a loyalty program associated with the card. On average, Canadians participate in 11 loyalty programs. We are a very mature market when it comes to loyalty programs. And lastly, credit cards afford you something that's called zero liability. Zero liability means if you have a statement and on that statement there's a transaction that was not you, you just call your bank and immediately that transaction's removed from your statement. So having intimate knowledge of payment methods, I can tell you this afternoon in confidence that the best way to pay for anything, hands down, is by credit card. And I don't work for a bank and I'm not selling credit cards, but the neural networks associated with credit cards are so sophisticated. The bank's floating you money for a period of time at no charge. You're probably collecting loyalty points or maybe cash back. And again, if there's any fraudulent activity on your card, without any hesitation whatsoever, you speak to your credit card issuer and that transaction's reversed. I can tell you horror stories about people who've had their debit cards compromised. And once that money's out of your bank account, it's not easy getting it back in, okay? So we'll talk about debit cards. They've also increased in usage, about 56% since 2008. After credit cards, it's the most widely used payment method at the point of sale. Consumers are really recognizing this whole contactless feature, so that's caught on. And banks, if you don't already have a contactless card in your wallet, they're actually accelerating the issuance of those cards because they know that people will have a contactless card in their wallet, they're gonna use it. And the merchants really like contactless cards. And when you think about companies like McDonald's, where their business model is really driven by throughput, so how quickly they can get their customers through the cash and get their food on a tray, the contactless method really helps with that because you're now not dealing with maybe an 18 or 19-year-old student figuring out how many nickels and dimes and loonies to give back as change. The contactless eliminates all of that, so it really does help the merchant with throughput. Those of you who have an Interact card, you might see a Visa debit logo on it or even a MasterCard debit logo. And why is that? Well, Interact, again, is a Canadian-based solution. And if you try and use Interact either online or in the States, doesn't work. However, if your card has a Visa debit logo on it or a MasterCard debit logo on it, then that card transaction will automatically fall back on the Visa or the MasterCard rails. So now you can use that debit card for an online purchase, or you can use that debit card in the US to make a debit purchase. Prepaid cards. So again, we have open loop prepaid cards, which are Visa and MasterCard branded, and we have the closed loop cards, which Starbucks, Tim Hortons, any of your gift cards. Open loop gift cards. Who has received an open loop gift card? Okay, a few. So in addition to open loop cards being used as gifts, and those gift cards specifically are referred to as single load prepaid cards because you deplete the funds that are loaded onto the card and then you dispose of the card. We're seeing in the general purpose reloadable space companies like Coho that are actually positioning themselves as complete replacements to your standard checking account. So by having a general purpose reloadable card, in this example, you can actually have your pay deposited directly onto the card. You can use the card in any point of sale environment. You can use the card online. You can even go to an ATM that has, in this case, it's a Visa card, so any ATM that has a Visa logo, and take out cash. The only thing that this card doesn't come with are checks. And I'm seeing an emerging market in Canada of individuals that are choosing to debank from the traditional banking system. So there's individuals who now have alternative products, for example, a Coho card, and they don't have a product with any of your traditional financial institutions. They don't need one. They're never going to go into a branch. They've got this app in their wallet which gives them some great information insofar as where they're spending their money. There's some tools to help them save. So we're seeing these general purpose reloadable cards acting as replacements to bank accounts. I'm also seeing them used as payroll cards. So individuals that might work in the service industry, specifically in restaurants, most people come into a restaurant and over 80% of the customers are paying with their credit card. Well, guess what happens at the end of the night? And I know there's at least one individual in the audience that's intimately familiar with the the restaurants industry. The manager of the restaurant actually goes to the bank every single day and gets a bag full of money so that the manager can tip out the staff at the end of the night. Okay, so we're seeing products come into the market where all staff receive a general purpose reloadable card, and the restaurant manager at the end of the shift just goes on to his or her computer and moves money electronically. So, Jimmy for being a busboy, $15.50. Johnny for being a server, $45.50. And the funds are on the card immediately. I'm also seeing these cards being used for the gig economy. So Uber drivers, for example, they can get paid immediately. I also see it in the construction space where, guys and girls that are working on a job site at the end of their shift, they're actually paid immediately. So that's the world we live in. People want immediacy, and these cards, from a payments perspective, are really facilitating that need. So no more having to wait 2 weeks to get a check, going to your bank, depositing your check, waiting for the funds to clear. These general purpose reloadable cards are going to continue to grow in popularity because they give the employee, the driver, whomever, funds immediately. E-commerce, 80% of Canadians are transacting online. How many of you have shopped online? So retail is tough. You've likely heard of the term showrooming. Showrooming is when you as an individual walk into a store, do all of your homework as far as the products are concerned, compare one product versus the other, and then in certain cases, right there in the store, you're going on to an e-commerce website and making the purchase for that exact same product, likely at a lower price, and then having that delivered to your home or your place of work. So e-commerce is going to continue to expand and grow. We see pretty much every segment transacting online. In fact, a growing segment is the seniors who are transacting online, because it saves them from having to be mobile and actually go to the store, saves them from having to actually carry the goods. I know from having done some work that individuals with either mental health issues or physical disabilities, that's their life, is transacting online. They get their medicine, they get their food. So e-commerce, as much as we think that it's super convenient just in our daily lives, it really is, in certain cases, lifesaver for individuals in society. And how people are transacting online, for the most part, it's credit cards. The credit and prepaid cards that were branded Visa and MasterCard are now increasing in popularity. So if you have your debit card from one of the big banks and it does have that Visa Debit logo on it, you're likely using that card as well. I also see people buying these prepaid cards and using those cards to transact online because they feel as though they don't want to share their regular Visa card in an e-commerce environment. So they have a prepaid card which they use to make online purchase. I also remember having managed credit card portfolios that customers would call up and say, Richard, can you have your team send me a Visa card with a $500 limit? And that's the card I'm just going to use for online purchases. Okay, regardless of the fact that you do have zero liability and you're covered for any transactions, there's still people that want to keep their online transactions separate, and they might have a specific card product that they use to transact online. So let's dig a little bit into the rental market, and this is something that I'm currently really familiar with because we do this every day, all day. So in Canada, there's about 4.5 million properties that are rental units. In the US, it's about 50 million rental units. Although most of the perception is that all of these rental units are managed by large property managers, actually 60% of the rental market is managed by an individual. So think about a basement suite, think about an individual that owns a condo here in downtown Toronto and rents it out. So most of the market is individuals. However, some of the property managers that I see, they may manage 50 units, they may manage 500, they may manage 5,000. I mean, in the US, we see property managers managing, in certain cases, hundreds of thousands of units. So when you think about a property manager of that magnitude, the whole notion of collecting rent from that many tenants becomes quite complex, and systems and processes are needed in order to make that as efficient as possible. So the average rent that I see in Canada is about $987. So this is across Canada. Our business kind of skews more towards urban areas. So from that perspective, the average rent is about $1,300. Vacancy rates, though 2.4%, this includes places like Yellowknife and the Yukon, right? So this is across Canada. If you think about vacancy rates, I'm most familiar with Vancouver because that's where our company is based out of, and the vacancy rate is 0. So it's very difficult to find a rental unit. And as a renter, having a need to rent a place, recently I would go to these, I make an appointment to see a unit thinking that it would be myself and, the owner or the property manager, the realtor in certain cases, be 50 people there with me. I mean, and if you don't have your post-dated checks, like right then and there on the spot, then you're not getting the place. So it's very competitive for certain areas. Again, Toronto, Vancouver, seeing a little bit more in Montreal. $1,300 is the average, but we see people that are paying rent, $5,000, $10,000, $15,000 a month. So as far as rent is concerned, that dollar amount, it really varies. And then if I look at the average ticket size, if it's a unit in Vancouver that's going for $1,200, in certain cases you have 4 individuals living in that unit, so you have 4 transactions every month because the funds are coming from each individual tenant. So again, that's an additional challenge for property managers or the owners because they need to collect rent from all 4 people. So we continue to see growth in online payments as it relates to the property management space and rent specifically. It's been increasing 15% a month, and it's pretty steady. So more and more property managers and owners are moving to electronic payments, not only because it's more convenient for them, but because tenants really are demanding it. I mean, every transaction that you make today, your expectation as a consumer is that you can either do it electronically, or if you're in the physical world, that you're doing it with a debit card or a credit card. So rent is no different. Tenants are moving into places and they absolutely expect to be able to pay their rent in the same manner in which they buy something on Amazon, right? Same checkout process is what their expectation is. Paying rent electronically, it saves a significant amount of time. So there's a study which said it saves 73% as compared to writing a check. Scotiabank did a check cost issuance model, and for those landlords and property managers that do collect physical checks, when we look at it from an activity-based costing perspective, there's about $50 baked into every single activity, including your time, including going to the bank, including depositing those funds, including, in certain cases, having to wait for those funds to clear. So there are actual definitive costs associated with collecting a physical check. So we asked tenants across North America, how would you prefer to pay your rent? So these results are slightly different from what I actually see in our database, but when we just pose the question, how would you prefer to pay your rent? This is what came back. So over 50% of renters across North America would absolutely prefer to pay with their debit card. About 30% would prefer to pay with their credit card, 13% from their bank account, and 6% cash. And some of you may be thinking, who pays cash? Well, let's again think back to individuals that might work in the service industry, and they're paid in cash, or they're doing some other type of business, they're paid in cash. A lot of times they want to pay cash. We provide a service where individuals can pay cash. In the US, it's CVS or 7-Eleven, and in Canada, Canada Post. But particularly in the US, for properties that are in Las Vegas, Nevada, we see people that will actually pay their rent every single time they get paid. So they're making 4 rent payments in cash. As soon as they have money in their wallet, they're walking in and putting some money down towards their rent, because they know if they have their cash and they don't pay their rent, then they might end up spending it somewhere else. And the last thing they want to do, like any tenant, is to be evicted. So there's definitely a segment that does prefer to pay in cash. So coming back to online rent payments, 2016, over 70% of people, or about 70% of people, were paying rent from their bank account. Moved to 2018, and that's dropped to just over 40%. So let's take a look at this a little bit closer, because this has been a monumental change within the last 24 months. I mean, we've been able to see this happen really quickly. And this is in the scenario where all payment methods are presented equally. So when the tenant has the choice to pay from their bank account, with a credit card, with a debit card, by cash, this is what we're seeing actually happen. So not a preferred method, but an actual method. So in 2016, almost 70% were paying from their bank account. And that's been dropping year over year. More and more people are paying with their debit card. But look at specifically the change in credit card payments. So from 2016 to 2018, it's doubled, so 36%. So there's 3 reasons why I see people paying with their credit card, and I personally talk to tenants on a regular basis, and I want to kind of understand their behavior. First one is, whether it's Canada or in the US, you have a huge segment of the population that's literally addicted to their points. So they will do whatever they can to earn as many points as possible, even if they have to pay a 2.5 or a 3% transaction fee. They don't care. They want their points. They're thinking about that free trip to Mexico. They're thinking about that toaster. They're thinking about that piece of luggage. They want their points. And it's no different to people with their cash back. When they hit certain thresholds, their cash back increases. So anytime they're able to put a transaction on their credit card, they do. I've spoken to individuals that rent luxury properties and they're paying, $8,000 a month, and they're telling me that they're getting a free plane ticket, once a quarter. I also speak to commercial property managers who are collecting rent from their commercial tenants, and the commercial tenants are actually using the points that they earn on their credit card to pay for holiday parties for staff, to offset other operating expenses. So, these points and this cash back, they do add up really quickly. So that's number one. Number two is today's consumer is lazy, so lazy. So there's a significant amount of people out there that it doesn't matter if it's a $2 coffee or a $2,000 rent, everything goes on their credit card. They don't even think about it. They tap, they swipe, they chip and pin online. Everything is on their credit card. At the end of the month, they see all of their transactions in one statement. And in many cases, they're actually going to auto pay that statement from their checking account. So again, lazy, they don't have to think about anything. Transactions are made, statements paid, they're on their merry way. Third reason why people are paying with credit card when it comes to rent, they say, Richard, I don't have rent money in my bank account. December 1st was a Sunday, first business day is a Monday. April the 1st, 2019 was a Monday. Most people get paid on Thursday. Thank you so much for giving me the option to pay on my credit card. I no longer need to use my overdraft protection. I no longer need to do a cash advance. I no longer need to do a payday loan. I'm going to put that transaction on my credit card. They may even split their rent payment. We can do $500 from my bank account, and I'll do $500 on my credit card. So from my perspective, speaking with property managers on a regular basis, there are many property managers and owners who will say, you know what, Richard, if my tenant has to put their rent on their credit card, then that's probably not the tenant that I want living in my property. And I say in response, I said, first of all, who are you to determine how somebody chooses to pay their rent? As long as you get your money, that shouldn't really be of any concern to you. And in fact, by not giving tenants a choice of how they pay their rent, in many cases, these individuals are having to use really high interest-bearing products in order to come up with the money to pay their rent. So less so in Canada, but absolutely in the US, many of the large property managers will give a couple of days before a late fee kicks in. So some property managers say, rent's due on the 1st. If you pay by the 3rd, you're okay. If you don't pay on the 3rd, then I'm going to hit you with a $75 late fee. I'm going to start the eviction process. So people are very anxious about ensuring that they make their rent payment on time. And again, if they don't have money in their bank account and they don't have a credit card option, well, they're going to have to find the money somewhere. And there's lots of companies out there that are more than happy to lend you money. Of course, you need to pay for it. It's not cheap. But it's certainly better than having to try and come up with first and last month's rent and find a new place and all that kind of stuff. So we're seeing a big trend away from a bank account towards credit card. The other one that I know tenants do not like at all is pre-authorized debit. So pre-authorized debit, for the most part, is the predominant way that individuals have to pay their rent in Canada. Many property managers set themselves up so that they obtain consent from the tenant to process a pre-authorized debit. Again, I know speaking to tenants, they absolutely don't like it. And it's interesting because in Canada, the dominant method is pre-authorized debit. When I work with our US-based property managers, guess how many property managers in the US process pre-authorized debit transactions? None. Zero. In the States. It's interesting that it's a significant cultural sort of difference whereby in Canada, the property manager, the owner, sort of takes the notion of, you're my tenant, you give me your banking information, and I'm going to pull your money. And there's time and effort associated with doing that. In the US, the thinking is much different. In the US, the property manager or the owner sits back and says, I'm the owner, you're the tenant. You make sure I have the money on the first. If you don't, I'm going to charge you, I'm going to evict you. But the onus is on you. I'm not doing anything. So in the US, we see funds being pushed to the property manager or the owner. In Canada, for the most part, we see funds being pulled. So overall, those of us who are familiar with the rental market, we know that the systems for making and collecting rent, I mean, it's archaic, it's inefficient, and it's expensive. So collecting these manual payments, it takes time, it's subject to human error. Property managers that hold tenants' financial information in a filing cabinet are subject to huge liability issues from a privacy perspective, from a payment card industry perspective, and just from liability perspective. So if that filing cabinet gets broken into and somebody now has access to all of that information that you find on the bottom of a check, which people complete or they'll staple a check. If I had the information that is on the bottom of the check, you're basically giving me the keys to your bank account. I can probably within 15 or 20 minutes empty the account. So as a property manager, if you're holding checks on file, you're assuming the liability. So more and more property managers are saying, I don't want to touch any of that stuff anymore. Inefficiency, the larger property managers, when it comes to a payment, it goes from this department to that department. The on-site manager collects the check, it gets sent to head office, and then moves to the bookkeeping, it gets posted and goes to the bank, so hugely inefficient. And then the number one thing that I hear from property managers that becomes a problem as the number of units increases is that they're managing all these different payment method channels, and none of the systems are talking to each other. So it's really challenging to reconcile and close out your month. So we have property manager that might be getting some payments through pre-authorized debit, might be getting some payments through a point of sale device in the office, might be getting some payments through Interact e-transfer. So all of these payments are being made through different systems, and it makes it quite labor intensive when it comes time to actually reconciling and closing out the month. Also on the tenant side, I mean, having to give 12 post-dated checks, as I touched on earlier, a lot of these tenants are having to buy checks specifically to give to their property manager. I spoke to a millennial about 6 months ago who was now given the option to make their rent payments online. And he said, you know what, Richard, when my property manager, well, in this case, the landlord said, I need 12 post-dated checks, I had to go to the bank, which I hadn't done for months and months and months. I got dinged this $85. And then when the checks came to me in the mail, I actually had to go onto YouTube to watch a video on how to write a check, because I've never written a check. My parents never showed me how to write a check before. It's never come up. And now all of a sudden I have to write 12 of them. So the tenant was watching a YouTube video to learn how to write a check. And today's consumer, they really do want the choice on how do they pay. Everyone manages their finances differently. Everyone's financial situation is unique. So today's tenant, just like today's consumer, expects, again, that Amazon-like checkout where they can choose whatever payment method they want. So we're going to move into technology, and this will sort of be the last section of this afternoon's seminar. So we're going to go through some of the steps that are involved with actually renting a place. And many of you, well, who's rented a place before? Okay, so good majority of you have gone through this process. Used to look in the newspaper, see what's available, I mean, today a lot of people will go to an internet listing service or Craigslist to see what's available. Setting up an appointment to actually view the place. Voicemails back and forth, not, takes forever. Get this really complex lease that you kind of have to figure out. The whole notion of screening that the landlord then needs to do. Sometimes they'll call references, hugely inefficient. Sometimes they'll actually pay and have a background and credit check done. Coming up with first and last month's rent, moving in, making those monthly rent payments, whether it's post-dated checks or delivering a check or pre-authorized debit. And then maintenance, something goes wrong, the shower's not working, trying to get a hold of the property manager or the landlord. Not always easy. So thinking about how do we remove as much friction as we possibly can from this entire process, well, this would be really easy. You see the ad online. You're able to actually book an appointment electronically to go see the place. You understand the terms and the lease in a really simple format. You submit your online application so that the property manager, the owner, can kind of check you out. You then are in receipt of the residential tenancy agreement, which you would sign electronically. You would then be able to make your first and last month's deposits electronically, be able to make your monthly rent payment, again, online with the payment method that suits you best. And then for any maintenance request, it would be sort of an in-app messaging type of platform. So we're seeing some of these things already come to fruition in the market. And within the technology space specifically, it's referred to as PropTech, so property technology. There's lots of startups that are focusing on each of the steps that I just outlined. Some of them will survive, some of them won't, but nonetheless, there's a ton of innovation happening within the property management space. So actually looking at a apartment, there's the augmented reality, so you should just be able to do a full walkthrough. You see this happening now with real estate sales at sometimes homes. They've got this video augmented reality, and you can actually, from the comfort of your living room, walk through the house. You should be able to do that with a rental unit as well. Scheduling a viewing, there's technology out there already, but it's basically the landlord or the property manager would open up a date and a time that's available, and then prospective tenants would just go online and book the time. So make it really easy and efficient to go in and view a place. And again, that reminds me of having shown up thinking I'd be the only person viewing the apartment, and there's 50 other people standing in line with me. So they'll open up the viewing and they'll get as many people to come. The property manager, the owner doesn't want to have to come back 50 separate times to show the place, so it makes sense that bring in as many people as you can, and it also plays on you from a psychology perspective. Like, if I don't take the place right now, then it's gone, so there's no thinking about it. Online application, again, this is something that there could be a lot less friction, so you should be able to just submit some key credentials and some key information about your place, about yourself, and then the landlord property manager would just be able to pull electronically a background check, or if they wanted to go a little bit deeper, they could pull a credit check on you as well. Obviously, you're giving consent to do so. Okay, the tenant screening. Lots of solutions out there making it easy for property managers and owners to do tenant screening. The lease signing, so in Ontario there's a standard lease, but there's no reason why every single lease across North America should be available online. Property manager, owner can make any amendments through the appendices to the agreement, but you should be able to, as a landlord or property manager, just send the lease out electronically via, DocuSign, for example, and then the tenant signs the lease, and there's an electronic copy that you both have. You don't need to, in today's world, get the lease, and then if you want a copy, it's being scanned and emailed, or in certain cases, it gets photocopied, and you've got this document that you've got to now keep in your file. Online payments, we talked a lot about online payments today. So for today's tenant, they absolutely expect online payments. You don't want your tenants having to Google how to write a check and watch a video on YouTube. So online payments, absolute expectation. Communicating and messaging can also be a lot more efficient. So property managers, I know, currently don't have the best systems in place. And for those property managers and owners that have, 50, 100 units, kind of managing all of the communications from tenants is quite cumbersome. So it should be funneled into one system, which makes it really easy to stay on top of the communication. And then lastly is maintenance requests. So this too should be all online, including the ability for the tenant to either take a video or take a picture of what the issue is, send in a description, and then let's kind of take a few steps back to that scheduling platform. You should then be able to schedule a time with the tenant if you need to let them know when you're coming in, or if they need to be there, to find a time that works for both parties. Wrapping up with mobile is the future, and there's no such thing as communication overload. And we're the space that you all work in is now moving heavily into mobile. Any of the steps that we covered this afternoon can absolutely be done through a mobile device. In our business, we see about 45% of the online rent payments that are being made are actually done so from a phone. So people are living through their phones, as you all know. And paying rent and managing their whole rental experience absolutely should be done through a mobile device, because again, that's the world we live in. So with that, I will conclude and say thank you so much for attending this afternoon.